All right, guys, take two. I literally um, recorded this whole thing and realized I forgot to turn my interface on, so there was no audio. So here we go again. Um, all right, wanted to talk about a couple things today, kind of where I see the value in Fubo, and then go into a couple key things to look at heading into earnings. Um, as always, this is not financial advice. Please do your own research. And with that, we'll kind of dive into this. So Fubo is one of those stocks. It seems like people either love it or hate it. People, some people think the stock is trash. I get it, but I just kind of see a different viewpoint on it. I think, previously, I pulled this chart up of, looking way back to 2020 and 2021, when it was, kind of part of the meme stock craze and it was trading crazy high. Um, I mean, at the time, people thought it was going to go to 200 or whatever. But the reality is they were insanely overvalued. I want to say their market cap was like 10 billion or 12 billion or something, based off of like, barely 500 million in total revenue. So it really, really just didn't make sense on where the business was at. And, people were just trying to ride a lot of hype on the sports betting. Um, and which obviously didn't really pan out. And just due to the interest rate environment and the pressure on profitability, I mean, it just got killed. It was overvalued, and the shorts came in and just crushed it. But the reality is now their market cap's like 700 million, somewhere around that range, off 1.5 billion in revenue. So I think we could drop down into the $1.50 dollar range, from where it's at now. Today it kind of got hit pretty hard, just from the general market sentiment. But it's sitting at like 224, 225. Um, but to me, it's already lost 95% of its value. That's where I see it's just lower risk, from kind of where it sits now, and the business has stabilized a lot more. Um, they have original content. They've got a whole new suite of executives there. They've been adding subscribers. They've been growing. Really focusing on their core business, getting away from the sports betting side of things. So it seems like they've stabilized a lot more, and I feel like they're positioned well now to start to claw back. Assuming they can continue to do well on these earnings releases, continue to add subs. I think they'll they'll be positioning themselves pretty well, which is really where I see the value. I think they keep talking about the 2025 profitability target. Um, I think we're still going to kind of trade sideways. We've had a lot of ups and downs over the last couple months. I think we're still going to continue to trade sideways a bit until they can really prove that they're going to hit their profitability targets. But it's a great stock to kind of make those swing trades on, and rather than just kind of waiting it out. In the long game, you can kind of make some money in the meantime. But heading into earnings, this is their Q2 earnings guidance. I think what we're really going to be dialed in on, they've had, we're expecting revenue to be up, but we're really looking for, as they've had price increases and added subscribers, we really want to see, to me, there's two key areas we're going to be looking at. Paid subscribers, last quarter they showed 1.2 million paid subscribers. They really need to show that they can keep getting that number up. I think just due to the cyclical nature of sports, I think this last quarter it should be a um, pretty hefty quarter, just due to the football season and obviously the Disney charter dispute. I think that that's a big one. Who knows how many subscribers they got out of that? Could be great, could be immaterial. But that's one of the things that's we're really going to be looking at because I think David Gandler's alluded to it before, but I know he mentioned profitability is somewhere in the 2 to 2.5 million subscriber range. And like I said, they've had price increases to help with their average revenue per user, that ARPU that they usually talk about. But the other big piece of that ARPU, because they can't just keep raising prices forever. So you have your subscription revenue and then the ad revenue. Last quarter, they basically showed that they were at 22.8 million, up 5% year over year. That number has been pretty flat. That's the other big component to the average revenue per user. They just need to really prove that they can get this number up there. And they hired. I pulled up this article here. Lynette Kaler is their senior vice president of advertising sales. It sounds like she has a lot of experience, but they're really, they're investing in these areas because they know they need the right people to have ownership over this. They really need their ad revenue to be in a more stable and growing position. Kind of going forward. So, she's been with the company like a year and 2 months ish. I think it said August of 22. It's been a full year of her there now, so it's really going to be interesting to see if she's starting to make progress and if they're continuing to make investments in the right places. Overall, I think the company is positioned well. I think it's going to be a pretty solid earnings next Friday on November 3rd. But those key areas we're going to be looking at as subscribers and ad revenue. They've had some of their new partnerships that they've announced: Pac-12 Conference, Nashville Predators, Boston Bruins. Those it'll just be interesting. It's to me it's good. It shows that they're trying other avenues to gain more subscribers. So at this point we'll really just see if that's actually going to start to pay off. But that's pretty much all I had. I'll probably post another video next week. But if you guys liked any of this, if I know I'm a brand new channel, but I'm going to start to try to post more on here. If you guys got anything out of this, feel free to like and subscribe. It really does help me out. I'll plan on gathering some thoughts and throwing something together for next week. Until then.